Good morning. Vasilis Gerasis for Trader24. Very shaky start to the trading session yesterday. The JSE having moved its service from the UK back to Johannesburg, South Africa. New trading platforms going live, and unfortunately not without their glitches. When trading did finally get underway, we saw the market moving sideways, a bit of consolidation to begin Q3. And this was really after a strong move on Friday, which was linked to the EU leaders' resolve to tackle the European debt crisis. Financials were up about 0.4% on the market yesterday. We saw our banking sector close up a healthy 0.7%, and unfortunately our industrials closing slightly in the red, down 0.06%. The South African rand firming somewhat, trading at about 8.13 to the US dollar. Some news coming out of our SA yesterday: manufacturing activity plunging to its lowest level since August 2011 in June, and the survey showing that sales orders and business activity being hardest hit. We also had the Eurozone PMI contracting for the 11th consecutive month, and we also saw Chinese PMI falling closer to the benchmark line of 50. Bad ISM manufacturing number coming out of the US yesterday, and if you couple that with a bad jobs report, one has to wonder, when is the Fed going to really step in now and start entertaining the idea of QE3? As I mentioned earlier, our banking stocks relatively strong yesterday, and on that note, I'd like to just highlight a graph that we picked up, which we think looks quite interesting. Absa Bank, for those of you who don't know, it is predominantly controlled by Barclays, and there has been some negative news around Barclays recently. But also, if we just have a quick look here, that's the graph of Absa Bank. We see it there, huge drop, probably its worst drop in 10 years on the back of a voluntary trading statement that earnings will be down. Possible issues there with the unsecured lending. What is looking quite bullish, though, we see at the bottom there a hammer formation. Technically, that is quite bullish. My strategy on this one would be to go long at about 140 Rand. My stop loss at 137.50 with a target price of about 150 Rand. The risk on this relatively medium, as I said, with the banking sector looking quite strong, and this one having taken quite a bad drop here. I don't think the downside could be too much worse, so I would definitely be a buyer down here and look to go long at about 140 Rand as mentioned. Another interesting development on the S&P graph, I know that we've spoken quite a bit of this graph, 1340 being the key level there, and we saw a false breakout down below 1340, now back up again through that 1340 on the back of some positive news. Again, the news being that the Eurozone leaders will bail out Europe, we hope. But an interesting formation on the S&P graph, which I'd like to just show you here quickly. If you can see there, we basically have an inverse head and shoulder formation. I would look at going long at about 1385 on the S&P now. My stop loss would be 1360 with a potential target of about 1435. Maybe not the clearest example of a head and shoulders formation, but one that certainly seems to work. Well, going forward, we have July 4th tomorrow, holiday in the US. Markets, I think, could move slightly higher from here. We are seeing some momentum coming in. Let's just hope that they do hold. And on the technical side, a little bit difficult to call at this stage, as we are seeing the markets moving more on news flow than technical analysis at the moment. So maybe let's just wait and see if we get some kind of direction, some clear direction on the technical side, and let's monitor what happens over the next couple of days, and we'll have more news for you on the next webcast. Vasilis Gerasis for Trader24.